Here we are again. And a warm welcome to one and all. And for those of you who not seen me before, my name is Langers. I'm a very tired, scruffy trader. These early mornings are killing me because it is currently 10 to 7. I've had a quick look round the charts and we're about to go on the DAX with the Morning Star. Morning Star is just a little bit of trading before you go to work to get a minimum of 10 pips and build a nest egg. So if that's good and you want to see the journey of this forward test, do subscribe. There's a little button just down here. It just takes a second, but it means a lot and encourages me to do more for the channel. So let me flip the screens over. We'll show you where we are and what we're up to. So as we come on to the 1st of February, we can see within the first month, January, we have quite a good equity curve and we increase the balance 56%. That's not bad. Oh, talking of things, that's not bad. Thank you very much, my love. It's very kind of you. Gotta have your coffee, guys. Definitely need your coffee. And Scruffy definitely needs his coffee, because we all know Scruffy likes a coffee. Anyway, let's see what we're looking at here. So if we look at this for the month we only had one scratch trade where it didn't trigger. In other words, I used pending orders and the order didn't get picked up and kind of left behind. But apart from that, we haven't lost a day in the entire month. So let's see what this month has to bring, because this is a forward test of around 50 trades, and it's just to make certain this is rock solid, because I worked on this all of last year doing different things, and well, it did okay, then it didn't do okay, and it did okay, and then it didn't do okay, because it was based off an older strategy. And I just couldn't get it to work, guys. Not consistently. So I've been messing around, changing things, and this is the forward test. So anyway, let's see what we're doing. It is the DAX, and the idea is to trade between 6 and 8 o'clock in the morning and hopefully get some money. Now this morning I will be going long with this. It's mapped out and we'll see if we can get a quick 10 pips. Okay, so I'll just leave the camera running and I'll come back to you when the trade's over. Okay, boys and girls, that was that. It was very, very difficult this morning. And I know you can look at this big spike and go, wow, you could have had loads there. It was actually quite difficult to judge this morning. And I'd rather be conservative, be paid, than take a risk, because that could easily have gone the other way. It's kind of tipping point. Now, the lesser of the two evils was to the long side. When it was here, I could have gone for this, but again, it was a little bit dangerous, and it could have just dragged me into a vicious pullback, sort of something like this, and sit me in a lot of heat. Now, I've got margin against me at the moment, which means I haven't got a lot of room to play with. So I've got to be very careful in time. But the initial analysis was correct. This is to the upside, as you can see, booming up. If we were taking this on the original, or the way that it's actually sold quite heavily, you'd have lost. In fact, the win rate on that is ridiculously bad. You know, it's marginally over 55, maybe 60%, which sounds okay, but in reality it's not when you're day trading. If you're swing trading and you've got big risk reward, I can kind of go with that. But when you're day trading, no, it's borderline gambling, and you will lose over the long term. So patience and sitting on your hands is actually a better position. So what have we done? Well, we're still at 96p because, as I was saying, I've got margin against me at the moment, and we've increased it by 1431. So let's have a quick look at the sheet. So starting here, 781. Risk is starting to come down ever so slightly. As the account grows, the risk comes down. Just nature of the beast. In the initial stages, you'll always have to take risk on, guys. You've got no other choice. Not if you want to build an account. And anyway, I don't go in for all of this 1-2% anyway. There's lots of things I don't go into with the narrative. The way I look at it is very simple. Common sense is the name of the game. And if you haven't got any common sense, you shouldn't really be trading in the first place, because it's a fickle beast, trading. And if you get it wrong, it'll take your money off you. It'll take it off you a lot quicker than you can put it in. So where are we at? Well, I can live with that. You know, we 59% up, still holding our hit rate, you know, 100%. And why? Because it's a sniper approach. It's more waiting, I guess, is the way to look at this. You are waiting to be right. And when I say right, I just mean do your analysis, mark your charts, make a solid decision, and then wait for all the elements to fall into place. If you don't do that, you're always going to be chasing the market. You're better off sitting back and, well, as I say, wait. Case in point, I won't really be trading much today. It's the first of the month. The markets are very odd today. They're very hard to gauge. So I'm just going to have a day off. You know, just sit back. I'll watch. I may do a little challenge or something for the squad a bit later on, just for a bit of merriment. That isn't something I recommend either, unless you know what you're doing. But even then, I'll be very cautious, because I'm not into gambling. Everything I do is measured and planned out, and that's what makes me consistent. And when I talk and I see many traders that are struggling, they never plan it out. It's almost switch the computer on and I'm here, give me a trade, I need a trade. And then they search all the markets looking for a trade out of desperation. rather than from planning. Simple stuff, but calm yourself down and you'll probably have more profit. So that's it for today. We'll do it all again tomorrow. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.